Dear viewers, Bitcoin's support level at $60,000 didn't hold up last week. And no matter how strong your nerves need to be in the crypto market, last week was still quite a bloodbath, which is why, following this significant correction, there are now strong signs that things are heading back up. We'll also take a second look at last week's US jobs data, and of course we'll discuss what to expect this week, in addition to SpaceX's mega IPO this coming Friday. I'll be discussing what you need to watch out for in the next few minutes with Oliver Michel from tokentus. Great to have you here, Oliver.
Hello.
Last Tuesday, we talked about how, the price had dropped to $70,000 during the interview, and you said it was going down from there. But did you expect this correction to hit us so hard, even dropping below the $60,000 mark?
Yeah, as we mentioned in the thumbnail for our video from last Tuesday, there was just one more small setback, and we've had that now. Whether that was the final one, I'm still not so sure, but as you said, we're down. I did think we'd drop down to between 62.5 and 65, which is our purple support zone, but well, it actually went even lower, down to the high 50s, a range we'd been keeping in mind as an alternative here for months now. Yes, and now it has fought its way back up to just over 60,000. And we need to watch how it moves from there, with what strength, whether it can initiate a counter movement, and if so, whether that, and this is what we have to decide, was the final bottoming out.
Of course, we'll take a closer look at all this on the Bitcoin charts. But first, let's start by looking at the US. As I just mentioned, the US jobs report came out last week. At first glance, the numbers looked pretty good, but as is often the case with certain US data, you have to read between the lines a bit here. In other words, a second look might be the decisive one. But at first glance, it was clear that we have a stable US labor market. That in turn naturally fuels expectations regarding an interest rate hike by the Federal Reserve, and that in turn drove US indices significantly lower on Friday. Regarding the labor market data, why is it important to take a second look, and what has changed with the FedWatch tool?
Yes, we had the labor market data last week, several sets of labor market data, but the icing on the cake and the most important figures are, of course, the unemployment rate and the non-farm payrolls. The unemployment rate, as you can see here, was 4.3% previously, 4.3% expected, and it came in at 4.3%. So basically, everything stayed the same. No improvement, no deterioration. Regarding the non-farm payrolls, revised for April, a positive development from the previous figure of 115,000 to 179,000 new jobs created. That was certainly a positive sign. And those 179,000 were, of course, the previous estimate, which had been put in quotes as just 85,000. And in the end, it turned out to be 172,000. And that was, of course, a positive shock for everyone. And as you mentioned in your introduction, it ultimately led to people saying, for heaven's sake, we have to change our FedWatch tool right away. And compared to last week, when we still had an initial rate hike in March of last year, we've already brought that forward, according to market opinion, to December. There's supposed to be a second one then in the middle of next year, and then another cut. So there's slowly a bit of movement in our plan, and the basis for that is last Friday's labor market data, which looks very good at first glance.
When you say at first glance, it's clear, of course, that there's a whole string of consequences to follow, because what sounds relatively promising here is, on the other hand, ultimately borne by the citizens, meaning that things can't be nearly as rosy as one might initially assume despite this positive revision. What did you find out? Why should the whole thing be viewed with a bit more skepticism?
Yes, well, these positive figures naturally sparked concerns about interest rates. Interest rates are going up, and the economy is actually doing really well. And that second look you just mentioned, I'm really, really proud of it. Global Select confirmed exactly what we'd already laid out here yesterday, just a few hours ago. I skimmed it on X this morning. It's important to understand that the non-farm payrolls report is based on a survey of businesses. Companies are asked, how many jobs have you filled? And the survey doesn't distinguish between full-time and part-time jobs. A job is a job. However, There is a second survey conducted by the Bureau of Labor Statistics known as the Household Survey. And instead of asking about specific jobs, the survey asks households which members have a job. And then it makes a clear distinction between whether it's a full-time job or a part-time job. And the figures for May showed that 79,000 full-time jobs had been lost. 600,000 full-time jobs were lost in 2025 and 268,000 full-time jobs were lost through May of this year. If you just think about it for a moment, if a person has 2 part-time positions, then NFP counts them as 2. So what could that mean? It could mean 79, I mean, just to put it in extreme terms. I don't mean to say that's actually the case, but just so you get a sense of how the numbers look. If 79,000 full-time jobs have been lost, and all 79,000 of those people have taken 2 part-time jobs, then you end up with roughly the same number of newly created jobs in that range. And on the surface, that sounds great. But in reality, nothing has actually changed behind the scenes. And that's why many people are looking, especially when it comes to labor market data, we need to look not only at the business survey, but also at the household survey. And that, Johanna, is anything but positive. So in that respect, you have to take a closer look. Of course, Donald Trump was the first to comment. Right after the report was released, he said, that's a great jobs report and the one that just was released. And based on a super great stock report, stock prices should actually be going up now. But, well, I don't know how he came to that conclusion. I think, well, just off the record, I think these figures, whether they're accurate, because an unusually large number of government agencies have been created. There's a major event going on in the United States right now. I'm sure a lot of part-time jobs are being created because of that. So from that perspective...
The World Cup?
Yeah, Licht is launching this week, and so I can definitely see people taking a close look at this, but that number is the key factor. Let's take a look at the families. 92,000 full-time jobs have been lost. That's quite a blow. And so even if it's true, the moment the economy is booming, because the job market is doing well, our response is certainly not that stock prices go up, but rather that interest rates go up.
When interest rates go up, stock prices can't go up because interest rates are naturally more attractive than stocks. Well, Donald Trump, of course, sees maybe that everyone is doing well. So many people are employed, so many people have the cash to invest in stocks. However, people naturally look very carefully at how to invest any spare money they might have in the US.
I recorded this segment because normally we only ever look at the non-farm payroll data from the business survey. But someone asked a question on our channel. The numbers are great. So what have you guys been saying for months? That the job market is getting worse and worse? And then I just included what I've been observing alongside that to make it clear that there's also a second look behind the scenes when the first one isn't quite so positive. The second one usually ends up revealing the whole problem.
Of course, the whole situation needs to be viewed from all angles. And while on the one hand you might say, okay, the labor market data is great, or let's cautiously call it stable, at least at first glance, that implies or opens up the possibility of an interest rate hike. On the other hand, in addition to the labor market, we naturally also have to look at inflation, which is coming in, and we can expect a few developments there this week. This coming Wednesday, we have the CPI consumer price data, and this coming Thursday, we'll also have the producer price data for the month of May. We also need to keep an eye on the conflict between Israel and Iran. The ceasefire is now officially over. That means there hasn't been much success there either. Quite the contrary, the situation is continuing to escalate. And on Friday, we'll have what we've already written about several times here on our Crypto Insight channel. And what you really can't miss these days, namely the biggest IPO of all time so far, SpaceX's massive initial public offering this coming Friday. In other words, the goal here is to raise $75 billion US. That would result in a massive market capitalization of 1.7 trillion. This could also make Elon Musk the world's first billionaire, or trillionaire, to use the American term. There's currently a fair amount of liquidity being withdrawn, even when you talk to people here, so they can position themselves for a potential subscription. But it's already oversubscribed several times over. Accordingly, I think Friday will bring some more movement, especially ahead of the weekend. As a shareholder, are you interested in SpaceX, or do you say that's not my thing at all?
I'm actually always cautious about big IPOs like this. Man, you really have to take a look at the brochure. And the focus is clearly on Croc, that is on the AI system, which is going to account for a huge share of total revenue. And that raises the question, is Croc really such a great AI system compared to the others? And will it reach that scale? I don't know. It's all too far away from me. The big players definitely play a role in that. And I don't know. I'm not really involved in that sort of thing. I basically only hold my own stock anyway. So that's why.
Too far away is a good way to put it, because when it comes to SpaceX, Starlink is still the cash cow, or at least it's on its way to becoming one. So right now, they're really only making money from the satellites, the ones that are, well, I don't know, thousands of times out there in space.
But given Croc's assessment, given Croc's positioning within the prospectus, it's clear that SpaceX has nothing to do with satellites and
pure AI fantasy.
Reine, an AI company just like all the others, OpenAI and whatever else they're called.
Well, they're also aiming for their next IPO.
That's how it looks. So in that sense, it's AI. You have to be aware of that.
Let's take a look at how things played out on the Nasdaq, since that's where the foundation of AI lies. As we mentioned earlier, there was a significant sell-off last week, and in today's interview we want to refocus on the Nasdaq, specifically on tech stocks. We saw that new all-time highs were reached. But we also saw that the Nasdaq posted its biggest single-day point loss in history last Friday. Is this the correction you've mentioned so many times already? Is this the final revision?
Yeah, looking at the chart, well, I had resigned myself to the fact that that might have been the correction. But after last week, where we were still up, and here you can see the vertical line, that was Tuesday. On Wednesday, we hit another all-time high, and on Thursday and Friday, it went down, and yesterday we managed to make up a bit of ground again. But I'm assuming that over the course of this week, especially in connection with the liquidity flow away from existing investments, out of existing investments to subscribe to SpaceX, it will go even further down, and that will then essentially have this correction I've always been talking about. One last correction, in my view, before the final peak is formed. And this Friday, as you mentioned, down nearly 5%. I just said it. The labor market data, the fears about interest rates, the 10-year US Treasury bonds, their yields have shot up. So it's not just the short-term Fed-oriented rates as tracked by the FedWatch tool, but also the long-term rates have gone up. And rate hikes are simply always poison for the economy. Then, of course, there's also Broadcom, one of the top 10 AI companies, which reported relatively poor quarterly results on Thursday. They really took a beating too. So not everything that glitters is gold when it comes to AI companies. And then, of course, there are the geopolitical risks. That was on Friday, and we know that something usually happens on Saturday or Sunday, and that's exactly what happened. The Israelis started, or the Iranians started, whoever started, firing at each other, which then also caused a brief setback. So, of course, everyone wants to get out heading into the weekend. And then, of course, we have the SpaceX IPO on Friday with the liquidity flows. We already said last week that this IPO would bring some movement to the market. Money is being reallocated, and I personally believe that a large portion of this drop is due to the fact that money was pulled out of the market. Nvidia alone lost 6% on Friday. So that also shows that we're on an upward trend. the last correction before the final peak. So we're right at the very top. And in this range, a day like this Friday shows just how fragile the whole situation is. Now we'll see if this corrects a little bit further over the course of this week. It all depends on how the SpaceX IPO is received, whether it was a huge success, mediocre, or a failure. If that happens, the price might drop a little further. The RSI has cooled off. We were really in a pretty intense phase. And then it's quite possible that many people are asking themselves, with the money I might not have been able to invest in the offering because it's oversubscribed, I'll put it toward other things. And then a rotation begins, possibly into our cryptocurrencies or risk-on assets. And I've said several times over the past few weeks that cryptocurrencies won't have a chance until this rotation takes place, moving away from the overheated AI market and into other assets, such as companies in the Russell Index or, indeed, our cryptocurrencies.
When you say that the US peak isn't the final one yet, that it hasn't been reached, what are some possible signs that lead you to believe there will be another peak, a final one?
Yeah, this is a site that more or less reflects my personal perspective on the matter. I actually experienced the dot-com bubble bursting firsthand, right on the front lines, and once again, history, it brings back memories, so to speak. Signs of a top forming in the US indices. We had that absolutely terrible Friday with Broadcom. I just described it. And then, of course, the NVIDIA CEO showed up in Seoul yesterday and really stirred up a real FOMO frenzy. Something along the lines of, we're just at the very beginning, and there's going to be an insane upside in the future. And the AI-related stocks are all absolutely very cheap right now. So from that perspective, that might be true, but you just have to take his word for it. So when CEOs of companies like that stand up and talk about
Take a dump.
beating the drum, then I don't know. After that, you hear a clatter. So there's always something fishy going on. Then, of course, you have to ask yourself, are we really talking about AI here? We covered this on our channel 2 months ago. As I mentioned, the 10 largest AI companies in the US account for 41% of the S&P.
Yes.
We saw a similar rate at the peak of the dot-com bubble, when telecommunications and internet companies were crashing in 2000 and 2001. In other words, if we take a look at this, as I just mentioned, SpaceX is actually an AI company. OpenAI wants to go public, and Anthropic wants to go public. Here we have something historic, and as a rule, whenever something peaks, like for example, the Nasdaq might be peaking right now, it's always linked to a positive historical event. The moment something flops, meaning we take a massive dive, think of FTX, then we usually have a black swan event driving it down. We have a historic event coming up this Friday, and it's the biggest, the largest IPO. We've said this several times before, and perhaps this is a signal that we're really heading toward the peak on the one hand, but on the other hand, if it turns out that all of this, if things get more heated than they actually are, then, or as they say, it's a flop. And with a 41% share of the S&P, the concentration is so high that all it takes is for something to go wrong here and there. Then, then we've got it. We've got a crash, and then everything goes downhill pretty fast. I'm always talking about the AI bubble, and the AI bubble will be followed by the everything bubble, because a lot of other sectors are obviously overheated too. And then exactly what we saw in 2000 and 2001 will happen. That doesn't mean the AI boom will come to a complete halt. It means that the good AI companies will, of course, survive. But first, a lot of the hype is being taken out of the whole thing. The hype is being deflated so that we can get back to reasonable company valuations, on the basis of which investors will then say, yes, we're in. So from that perspective, things are being fueled by FOMO, and we have an insane, incredibly high concentration of themes here, which makes the situation brutally dangerous. And there are historical analogies, as I just mentioned. And all of that ultimately leads, in my view, to this conclusion. Yes, there are signs of a top forming, and I believe that once the correction we just discussed is over, we'll be on the final leg to the top. That doesn't mean we'll see a crash. Rather, as I mentioned recently, the market goes up, it goes down, it goes up, and it goes down. And that's the whole rollover that we mentioned 3 or 4 weeks ago in reference to the Nasdaq. Back then, it took the Nasdaq 160 days between 2000 and 2001 to essentially go from here to here to complete this rollover. And that's exactly how it will be here too. It will start somewhere and start to crumble. Then if the dike breaks, more and more water will flood into the land, and eventually it will be submerged.
We still have a little time until next Friday, until SpaceX's IPO. That's when the groundwork will certainly be laid for determining the direction and success of all these AI ventures as they take their first steps onto the stock market floor. Until then, let's take a look at Bitcoin. We've already seen that. We're looking at the daily chart right now. As we just mentioned during our interview last Tuesday, we dipped below 70,000. That was quite a roller coaster ride, going from 70,000 US dollars to 60,000 US dollars in such a short time. We've also already discussed the options. Sure, viewers often write, or people in the community often say, he always says it could go up or it could go down. Yes, that's certainly true. But the question is, in what increments? Where is the support? Where could a reversal or a trend shift be initiated? How might things play out now that the price has fallen below 60,000 US dollars?
Yes, as you just explained so well, the timeline goes like this. It's moving upward, and we've said that there's a tough battle taking place among the 80,000. It might break through, or it might not. That's just how it is. Yeah, and it didn't break through. It went down. Then we said it had to stop around 73,000. That's around 76,000. The rest is the red zone. We hovered there for a while. Did we mention that this is an incredibly critical area? From there, you might be able to make another attempt at breaking the 80,000 mark. Or, alternatively, if it doesn't hold, then we'll fall. And that's exactly what happened. And then last Tuesday, we were here together and said in this interview that we'd just fallen below 70, and I also said, word for word, and now we're heading lower. That, and I had drawn this area down here between 60 and 70,000 and had identified a support zone, namely the support zone between 62,000 and 65,000, the purple area, which I had derived here based on the two peaks here, where I believed Bitcoin would pause on its way down. And that's exactly what he did, at least for a few hours. It stayed in that range for a few hours. I was thinking, okay, that's a good sign, but then it kept falling, even below 60,000, down into the high 50s, before it managed to stabilize somewhat over the last, let's say, 2 days. You can see that green candle from Sunday. Monday held up pretty well, and today, Tuesday, we're essentially at plus or minus 0. You can see we've returned to the purple zone between 62,000 and 65,000, where if you were to plot the volume chart on the side, there's a peak. So there's a fair amount of activity in that range. That's where we're currently moving. And now we come to the question you raised at the beginning. How do we move forward from there? Let me summarize again. As of June 9th, we've been here for 4 months now. So we've been talking about this chart for 4 months now. We're still in the process of forming a bottom. So no one can say, is that it? Or is it going to go further? We're still in the process of forming a bottom. The downside, as I just said, to a maximum of 60,000, that was option 1, and it failed. We broke through the support at 62.5 to 65. We also briefly dipped below the 200-week SMA. We've entered the high 50,000 range. It's been noted here for months that this could happen. Now it's happened. Not by much, but just barely. And the question I raised at the beginning, we have here at this point, there was significant trading volume last Friday, and there was also significant trading volume on Saturday. You can see that here. An unusually large number of liquidity clusters have been removed. So, Was that it with the surrender? Well, I'm not entirely sure about that. I just can't imagine that that was it. I mean, I'd like to think that was it, but I don't believe it. I've said before that a movement like that tends to fizzle out. And you think, this is the bottom and now it's going to go up. Yeah, that was the bottom, and then it drops a little bit more. I've already mentioned that several times over the past 2 years before it starts going up. And I can well imagine that in this area, we'll also move a bit to the side first, maybe go down again, dip a little further into the high 50,000s before we start going up. That's my plan, my roadmap, my analysis at the moment.
Meine Analyse.
But what's to stop us from simply seeing the next higher low form here and now? Does it need to go down again? So
No, you don't have to.
why do you think that it will happen again when everyone feels a little bit safe?
For the simple reason that the moment this goes down and that goes up, many traders are positioning themselves with their long positions. Use leverage on long positions, whether for speculative purposes or with actual spot purchases, and set a stop loss order in this range. Then they pull it up, and more people start gathering here, and then they pull it down and go through everything again.
But that's a never-ending story, isn't it?
Before it goes up. Well, okay. Never ending in the sense that at some point the buy wall will be so big that they won't be able to drag it down anymore, and then they'll be stopped here, and then it'll go straight up. But basically, as you can see here in many places, it goes down, it goes up, it finds a safe haven, then it dips just a little bit below that range before it goes up, and that's exactly what I expect here. Of course, it could go straight up from here. It could go sideways, dip a little, I don't know, $57,000, $58,000, $59,000, and then go up. Of course, it could also go even lower. No one's certain about that. But those are the scenarios I currently see on the downside, and for me, that's the most likely and possibly the most sensible one right now. And we've discussed the upside at length. So, Johanna, the key questions are, was that the final capitulation you just mentioned? I'd say possibly. There could be a second one. And the next question, when will the rotation take place that will then give the whole thing a significant boost? That concludes my analysis of the situation.
When you say it's entirely possible that we could fall back into the high 50,000s or the range of the high 50,000s, what makes you think those are or could be the levels we're talking about?
Yes, that question came up on our channel too.
Yeah. Yes.
And we already answered those a few days ago. Where did that claim come from? That it could also fall into the high 50,000 range. To do this, I plotted the Bitcoin chart on a weekly time frame using a linear scale. Not a logarithmic one, but a linear one. And here you can see that this was basically the peak of the last cycle. That was the last one. That was the last bear market. That was the last bull market, with the first peak, the actual peak, and the second peak, which overshot a bit. And here you can see this red bar. That was a bump. I couldn't get over it. That was a bump. I couldn't get very far over it either. And then we got started here with the bull market that was on the rise. This is where we started our interview series. And yeah, the entire price action has been pulled up. And here you can see how, at this point, there was resistance here and support here. And if I were to estimate that range, I'd put it somewhere between 55 and 60,000 US dollars. A range where I've told myself I can well imagine the price might level off by then at the latest. And yeah, if you look at it this way, we've actually had some activity in this area before. And here you can see how it went down to, I think, 59,200 on Bitfinex. So we'll see if this orange area holds. But Johanna, I wrote it down here again. We've seen this pattern so often on the way up. I realized that while I was making this chart, I remember this phase here when a lot of people were saying, it's gone up and it's dipping here and it's dipping here and it's dipping here. We're falling now, and we said, no, it's going to keep going up. Same thing here. Here was the drop. We're falling down to 16,000 US dollars, for heaven's sake. Yeah, and we had the same situation here. It rained really hard here, and you can see very clearly that it goes down, then it rises up, and then it goes down again. And this new dip is a little deeper than the last one before it goes back up again. If I hadn't been messing around here, you'd probably be able to see that too.
I'll step back a bit so you can see it better.
Yeah, you can see here. It's going down here, and then there's another dip, and that's when all the leveraged long positions get liquidated, all the stop loss orders get triggered, and then it can move upward with some breathing room. And that's exactly what we're seeing here. I can definitely see something like that happening here before it starts moving up. So that's the situation, and based on that resistance, support, this suggests a figure in the high 50s. I'd bet on that for now. It's possible that it won't reach that level, but at first glance, I think it might hold for now.
As far as the audience is concerned, nothing happened. Hermann just dropped his dip here. Let's take another look at the weekly chart, because we've had quite a wild ride from 70,000 to 60,000 in just 1 week. That must have left its mark on our traditional indicators like MACD and RSI, of course.
Yes, absolutely. That was 14%, as you said, last week, and that's bound to have an impact on those two indicators. So here you can see the MACD is about to dip back into the red zone. It depends on how the week goes. The RSI has continued to fall, as you can see here, and it's now slowly moving into the oversold zone. So based on that, we can expect a corresponding rebound soon. I'd just like to compare the situation to, I don't really like comparing things to the past, but just to help you understand, yeah, we had a similar situation here before where the RSI was oversold, just like it is here. And then you can see that it went up, rising slightly, just like here, and then came that final move, that final candle that sent the whole thing down. And that's something I'd compare to what we saw last week before it moved sideways and then up. So it goes down here and up to the side, then down this path and up the path that I think we're about to see. So right now, based on all these indicators we have, all these environmental parameters we have, in my view, there's currently a strong case to be made that we haven't finished bottoming out yet, but are on the verge of doing so.
We won't be looking at the monthly chart right now, but we will be looking at Bitcoin dominance. There have been some changes here. In other words, Bitcoin dominance has continued to decline. As for altcoins, we've also had a turbulent week and a negative one at that. What's going on right now, and why is Bitcoin's dominance continuing to decline?
Yes, Bitcoin's dominance does ultimately correlate with the strength of altcoins. And we've been looking at Bitcoin dominance a few times now, and we want to keep doing that. Last week, the second big red candle was only half as big on the downside, and over the course of last week, we saw that it had fallen well below that upward channel, but has now bounced back a bit, though the downward movement is quite clear to see. Here you can really see at that moment, well, it was very negative overall. And those red arrows, as I mentioned last week, if Bitcoin drops more than the altcoins, you'll see red arrows pointing down, and that's exactly what happened. So the moment we see a red arrow, or rather a drop in Bitcoin's dominance, that doesn't automatically mean that altcoins are going to skyrocket and take market capitalization or market share away from Bitcoin. It just means that they aren't falling as fast as Bitcoin. Conversely, when there's an upward trend, we've seen that Bitcoin gains momentum first before the altcoins follow suit, which is why we're seeing this small pullback. But the trend is clearly downward, and that too is an indicator that the crypto market as a whole, well, hopefully, could start to rebound in the near future.
In other words, this isn't necessarily a clear sign that Bitcoin's dominance is declining or that things are finally taking off.
The moment Bitcoin's dominance starts to decline, there are two possible scenarios. The first scenario is the one just described. Of course, the second one is interesting. As Bitcoin's dominance declines, this can also be interpreted to mean that Bitcoin is rising, which is what we want, but the altcoins are rising.
Faster.
Faster. And those are the two interpretations of the red arrow. Right now, we have the first interpretation. Yes, the one where these strong red candles are appearing simply because Bitcoin has fallen more sharply. And hopefully more red candles will follow, though those would be based on the second interpretation.
Bitcoin isn't really moving up right now. You mentioned that there might be another dip, but then in the meantime, let's take a look at the altcoins, because if Bitcoin loses as much as 14% in a single week, experience shows that it doesn't look like it's going to be a great week for the altcoins either. We'll start with Ethereum. It also took a serious hit last week.
Yes, you can see that here from the red candle. Yeah, what can I say? Really just one story. We've been tracking a dotted line here for weeks. Strong support around $10500. I said if you look to the left, you can see where they're coming from. I didn't think we'd see this support level so soon, but we saw it last week, so I decided to plot Ethereum on the weekly chart at the 21-day moving average. High, that is the peak of the last cycle, followed by the bear market. And that's actually what's supposed to be the bull market. So the bull market has in effect brought Ethereum right back to where it started, namely to one high of $4,800. No more, no less. And the $1,500 support level we've always talked about. It comes into play here, it's a support level here, it has been a support level here. And as you can see here, it bottomed out exactly at $15. That was 70% of the way down from the top that we just saw. And maybe just to go back to the image we were looking at a moment ago, the first red arrow. That was Bitcoin's path to its all-time high. But on Bitcoin's journey to its all-time high of 126, altcoins like Ethereum have performed significantly better. And as we look at this upward trend, Ethereum gained 260%, and at that moment, the first downward trend in Bitcoin dominance began. And in this area here, an upward sloping channel is essentially forming, in which Bitcoin is essentially eating into the market capitalization of the altcoins again. And you can see here that it's fallen 70% from top to bottom. So those are pretty significant figures. But the 1,500 has to hold, Johanna, otherwise it goes further down, yeah.
We're also looking at XRP, which is number 3 or maybe number 2 among altcoins and number 3 among cryptocurrencies overall. And here too, we have a solid candle. You have a weekly candle here and it shows a 71% loss. So basically we're seeing the same pattern here.
Yeah, that's right, that's right.
So what's the deal with those spot ETFs? That's always a...
Let me just say something real quick. When we were up here in this area, I said that if we drop below that, below 180, we've seen this chart before. There's nothing here that could stop Bitcoin or XRP from falling any further. If we drop below that, it's going down. And that's exactly how it went. We dropped down here and we were at 1.4, 1.5, and I just checked where the strong support level is, similar to ETH. And you can see that support in this way, twice as resistance. Maybe there was a mini support here because here on the Binance platform, there was that huge wick on the 10th. So from that perspective, we have support here, strong support, between 91 and 93 US cents. And to all XRP holders, you need to be prepared for that. If we really go into the high 50s range with Bitcoin, then it's quite possible that we'll go into that final capitulation here in this range as well and bottom out there before it can then go back up relatively quickly. So from that perspective, yeah, those are the ones, as you mentioned at the beginning, the lower limits of our major altcoins, the support levels that should definitely hold.
I remember last year when it broke out of this wedge and started moving upward. That was right around the time I took the liberty of taking a vacation last year.
Das war vorletztes
That was the
Jahr.
year before last, 24.
24.
But this was,
Ja, das,
Yes, that.
ja,
but that was during my
ja,
vacation.
das kann sein.
Yes, that could be the case.
I'll post on our Crypto Insights channel when I plan to take a vacation this year. No, all joking aside, of course, we're hoping for a significant upturn again, but you're right. With this steady climb, there aren't any resistance levels left here that could in any way serve as a cushion to break the fall. How does it look?
Well, the XRP folks just need to realize that when things like this happen, the price can plummet without any support. But things like this can also happen at any time on the way back up. Positive market conditions.
Like this?
A positive market environment, and then maybe some news like the DTCC doesn't just use XLM but also XRP, and then something like that shoots up just as high as just like back then.
We'll get back to that news in a moment, but first let's take a quick look at the spot ETFs to see how they've been positioned.
Yes. We just saw it on the weekly Bitcoin chart too. The last week for Bitcoin was disastrous again. There was an outflow of 1.72 billion, and the outflow from BlackRock alone was over $1 billion last week. That was the biggest outflow week ever at BlackRock. We have an outflow of 173 for Ethereum, an outflow for Solana, and the only one that, as always, week after week after week, has a small but steady inflow, which suggests a good accumulation. So companies and individuals are buying up XRP week after week despite this phase. And since XRP is, well, there's a lot of steam building up, and when it explodes, hopefully it'll go up.
We've asked and answered this question several times on the channel, why, despite all the positive news and what is actually a pretty good environment for crypto, prices just aren't taking off. And we've seen a similar pattern. You just mentioned XLM last week or the week before. The news broke that they're entering into a partnership with the DTCC, essentially the clearinghouse for the US stock exchange regarding tokenization. This news is of course groundbreaking, but it had absolutely no impact on the price. That is, we saw that XLM went down along with all the other cryptos last week. Why does such news, which is actually going to have quite an impact, fizzle out like this in this market situation?
Yeah, it's what I always say. The price follows the market, not the news. I had planned weeks ago to use this example with Costolani's dog, and you can see it here. This is the proof. For weeks, XLM has been moving sideways. I calculated an average of 17 USD and maybe 16 or 15. It doesn't matter now. It's just about the order of magnitude. And then news like this comes along. I mean, really groundbreaking, revolutionary, epoch-making news that basically shapes the future of a stellar network with the XLM coin. Secures in the future and turns it into a very significant system. And you can see how it's gone up 100% here in just 3 days. We're looking at the daily chart. After all, it's gone up 100%. And then what's the argument for it? It could decouple. We also had the questions, can XLM decouple now because of this news? I said, nope, that's not going to happen. And then came the 100% gain, and and then of course it happens without warning. Profits are taken. If institutional investors, if investors make 100% within 3 days, then there are just people who don't just plow through like we do, but those who trade and those who then pull their money out, who sell again. And if the market environment is bad, as you can see here, then you just lose out on XLM again, and then the price tends to follow the market rather than the positive news. And you can see we're up 100%, then we've fallen back 32%, and the actual delta, this good news, is the delta between 17 cents and 20 cents, where we are right now. That's a 17% gain and a 17% gain relative to this news. It's in K. It bears no relation, and therefore Whoever is sitting on a coin and is sitting on a system or believes in a system, and the system delivers great news week after week after week, like with XRP, for example, that doesn't mean by a long shot that the price rises accordingly. It means that the price rises disproportionately, precisely, when the market environment is right. And that's not the case with cryptocurrencies right now.
But that raises a question for me. If market conditions aren't right, and we might soon get the next piece of extremely positive news we're all hoping for, namely the Clarity Act, which is finally supposed to make some progress, could such news fall flat in a difficult or tense market environment?
Yes, I hope that the Clarity Act, and now that we have it, the clock is ticking, as it said on the slide in the weekly overview. The clock is ticking. We have exactly this June left to get that through in order to provide clarity there, in the spirit of the Clarity Act. And if that happens, and the market environment adjusts accordingly, then we'll see an impact from the Clarity Act. But the moment that happens, and if purely theoretically we really do implement the rollover now, then even the Clarity Act won't make a difference. The good news, the really good news, regarding certain systems, coins, projects, whatever, that's exactly like the number 15. If you multiply it by 0, you get 0. You can take the number 30 and multiply it by 0, and you still get 0. This proportionality factor has to be greater than 1. Then the news matters. So if the market is the proportionality factor and the news is the normal factor and the market proportionality factor is 0 or less than 0, then you can do whatever you want here. Nothing happens, but woe betide him if he turns one. Then things will get interesting. So, sorry, it's either 0 or less than 1, in which case it goes down, or greater than 1, in which case the message, or rather the second factor, becomes correspondingly large.
We don't have a schedule this week because we're still right in the middle of this situation. Nothing has changed, and a fun play on colors wouldn't actually make any difference right now if there's simply nothing to indicate whether we're moving forward or taking a step back. That means we don't have a schedule with us, but of course we still have it in mind. What we also have is quite a few questions, especially here on our Crypto Insights channel, and there are two distinct themes that have become very clear recently during this significant correction. The first is the despair over the correction and the losses. Losses of up to 60% naturally leave no one unscathed, and then, right on the heels of that, comes the hope for the start of one of the two rallies you've already hinted at several times. The question, of course, is this. You can tell from the tone of voice or the way they write just how desperate some members of the community actually are, and then they naturally ask themselves, how do you deal with that? You're still all in. We said that as soon as you cash out, as soon as you personally step away, you'll say so, but by now your portfolio has probably thinned out quite a bit. How are you handling that emotionally?
Nervous. I don't have a problem with that. It's about the emotions involved in the whole thing. And the time, and ultimately you can get a handle on it by considering the time frame in which you view the whole story. So as you already mentioned, we agree that Bitcoin is teetering on the brink of the $60,000 mark. It could now drop down to the high $50,000 range and maybe even further. But he could also go up. I mean, where he is right now, you could really call it an abyss, even though he's already fallen a long way. Of course, that's really putting a strain on my nerves right now. And I also catch myself every now and then looking at the 10-minute chart and thinking, this can't possibly be real. And then I'm actually glad when I get distracted by something else for a couple of hours. And then I look back at the chart and see, wow, you've actually done something meaningful here. And you don't necessarily have to follow the nerve-wracking 10-minute chart. So in that sense, you have to be clear about one thing, Johanna. We have gathered here not as traders. We didn't come together to take advantage of a 70 or 80% surge in XLM, cash out, and move on to something else. We came together as hodlers. We want to invest in the crypto market for the long term and view the blockchain and crypto market as a long-term investment. as an investment in the disruptive transformation of the traditional capital market. And we have one more thing to add. We want to tweak the whole thing just a little bit by going out the top and in the bottom if we can manage it. And there's a 10-minute chart, an hourly chart, a 4-hour chart, and a daily chart, which is actually way too much, way too granular. A weekly chart is more than enough. You have to be clear about that. So when someone asks, so what should I do now? I always reply, what's your investment horizon? And when they say, well, I can let the money sit for 4 or 5 years, then where's the stress factor? Because in 4 or 5 years, the whole thing will certainly be up to a certain standard, and if we can make some improvements along the way, so much the better. Or you also have to be clear about what kind of market you're in here. I've lost 40%. Yeah, so 40%. I haven't been at this very long, I've lost 40%. To make up 40%, you have to 40 times 6, 66.6% increase. 66%. That's what XLM has lost in 2 days. I mean, yes, it's obviously painful to be down by that much, but the crypto market is also capable of making up for it quickly. I experienced that myself back in 17. I just couldn't get out of a few stocks at the peak. I was way in the black, and then I took a brutal hit and told myself, come on, just bite the bullet. Yeah, and in the next bull market, it was all forgotten. You don't really have those great multipliers anymore, that gap that used to open up, but you're definitely back in the black. That means, yeah, it's nerve-wracking, but to keep your cool, you have to remind yourself why you got into this in the first place. Especially with HODL, especially when it comes to a long-term investment, a multi-year investment, that we ideally want to optimize a bit further. And the next one, a bull market is definitely on the way, and the next bull market will make up for it. The sharp declines will be offset by equally sharp gains. And you can sum it up like this. If you have an opinion, if you have a strategy, everyone for themselves, I for myself, and everyone for themselves, then you just have to give this whole thing some time. And if I go over there now and say, well, we're now above 60, and I think we'll move a bit to the right for a few more days, and then it might dip down a little bit, see a massive sell-off before it can finally move higher. Then I can't sit in front of the screen looking at the 10-minute chart and ask myself, when is this going to happen? Instead, I simply have to stay calm, look at the time frame, and tell myself, yes, that's going to happen, and I'm watching it now, and I'll react to whatever happens at the end of the day. Because no one can predict the market with 100% accuracy, and we can't manipulate it to make things turn out the way we imagine. So from that perspective, I can only say to everyone, stay calm, temporal dimensions. Why am I here? What is my time frame here? Do I have any money left to invest? If not, then so be it. From a long-term perspective, the market is performing so well that by the next bull market at the latest, a fair amount of the losses will have been recouped. And the bull market, well, it's coming. There's absolutely no question about that. Unfortunately, though, it will be the last one.
And when the next bull run comes, we'll of course be following it here and analyzing it accordingly. I hope it won't be too long before market participants' nerves settle down a bit. But in any case, thank you very much for your insights today, Oliver. Dear viewers, that's all for now. We're looking forward to this coming Friday, the IPO, and of course the US economic data, and then to Tuesday when we'll be breaking it all down here.